Let's welcome in our market master of the day. Mihir Vora is now joining us, Chief Investment Officer, Trust Mutual Fund. Mihir is in our studios. Mihir, great to have you with us here. Thank you very much for your time. Let's just start with just that, which is Policy Bazaar, PB Fintech. What are your thoughts?
See, I can't comment on specific stocks, but in general, the fact that there are now companies in specific new age or new tech segments, which are B2C, these are companies which have now created some kind of a moat in terms of their niche. So whether it's in the B2C retailing space or B2C financial space, we have other examples where B2C companies which have millions of subscribers are now cross-selling loans, etc. So this network effect and the first mover advantage is leading to a lot of value creation in some of these new age companies. So we've been discussing this for the last couple of years. We were not comfortable when a lot of these value IPOs came in 2022. So we did not participate in that. But last year we started participating when the valuations corrected. It was only a question of valuations. Nobody was questioning the fact that these business models are unique and they have a moat. And in most of the segments, it's going to be a winner-take-all kind of a situation. So maybe you'll have one or two or three players max in each of these niche segments. And I think now we are beginning to see the benefits of some of these.
Okay, by the way, I want to mention that the all-time high for PB Fintech was 1470, right? So it's still off 50% from its peak. I mean, people have lost and gained money in this one. So, well, we'll keep tracking that for you, PB Fintech. But how are you feeling about the markets? I want to start with L&T, actually. You may not want to comment on individual stocks, but, there is operational weakness in L&T. But the order inflow guidance is very strong. As an investor, do you use this as an opportunity to buy into names like L&T, or are you cautious?
No, certainly. Infra and construction and capital goods, the investments theme continues to remain, very robust. I don't think there's any change in that. But the markets have run a bit fast, and you are seeing these +7, -7 in any kind of result, right? If it's a disappointment, it's a -7%. If it's a surprise, it's a +7. So I think the markets are a bit stretched in some of these segments, and you can see some sharp reactions. We've seen in some of the financials also sharp reactions on a little bit of disappointment. So I think this is natural at this level of the market. I don't think the structural thesis has changed.
All right. What about pharma, Mihir? That started this year actually very well, one of the best. Dr. Reddy's numbers started a little bit subdued. The stock is well in the green. It's one of the top gainers. Now it's up close to 2%. Your Piramal Pharma, the rank underperformer, suddenly that one as well has popped up in trade. What are you making of the pharma space? Is the worst of pricing erosion behind? Are things going to pick up from here on?
Absolutely. We've been talking about this, that pharma is one sector which probably is way below its all-time highs. I mean, it's underperformed for almost 5 to 7 years. So I think there was a lot of catching up to be done in pharma, which is now happening. Plus, we had the spate of FDA, you can say, inspections, which had some negative news in some of the stocks. But I think we are all past that. And the fact that some of the largest generic companies in the world are facing financial stress means that these level of generic drug prices are no longer sustainable. So Indian companies were anyway one of the most efficient and cost-effective manufacturers of generic bulk drugs and generic formulations. So I think they'll be the last one standing, and this is what's happening.
Anything from the budget tomorrow, Mihir?
Budget, the key thing to watch is whether they continue the capex push. Last 3 years, we have seen revenue expenditure growth of just about 3%. And capex growth of almost 30%. And that's what's creating a lot of the excitement in some of the capex names, construction names, which has been sustaining the market. The fact that this is an election year may veer a bit more towards subsidies and revenue expenditure. So whether it comes at the cost of capital expenditure is something that needs to be seen.
Okay. Well, I just want to point out that for the market, it's a little bit under pressure right now. So down about 50 odd points, but the mid-cap space is really surging. So there's plenty that's moving around over there. A couple of these names, Piramal Pharma is up, 3.5%. M&M Financial is up almost about 3 odd percent, post its numbers. And Tata Motors, ahead of its earnings, has been just hitting new highs. The entire auto space is expected to do pretty well this time around. Tata Motors has been, I think it's almost doubled in the last 1 year. At this price, is the risk reward still favorable for names like these?
See, I'm more bullish on the domestic economy and the domestic consumer demand. So some of the names where you have international demand, international operations are far bigger. It's difficult to take a call. But having said that, auto in general is another sector like pharma, which did not do much, even compared to the pre-COVID levels. So my guess is that auto, pharma, these are segments which are still, in terms of the size of the industry, size of volume growth, far away from what their potential long-term growth rate is, and they have a longer runway, I would say, in this.
You know, in the last 3 years, Sonia, Tata Motors stock is up close to around 10 times from those lows. So if someone wanted to buy a Jaguar, they said, let's buy the stock, let's take a punt in there. You know, it's rare.
It reminds me of that story of Eicher Motors, right? When it went, I remember at one point it was at 8,000 rupees and it went to the high. Then in the next 1.5, 2 years on Eicher Motors was 22,000. And at that point, people said, you know, if you'd bought the stock rather than the bike, today you would be sitting in a Jaguar.
It's all timing, right? If you bought it in 2017, you know, if you bought that Jaguar, you would at least have the Jaguar, but if you bought the stock, you would be sitting 1/4 of the stock price. But if you bought it in 2020, you'd be saying, yeah, it's up close to around 10 times. So that's, you know, it depends on when you get it.
Yeah.
Absolutely. But Amir, tell us about the banking space. You know, we got into this year, everyone was saying, wow, this is going to be the year for the banking names. Valuations in line, you have earnings visibility as well in there. And everything else may falter, but this one will hold one end up. It's actually been the reverse so far because of the big boy HDFC Bank.
Absolutely.
How would you approach the space between private and public sector banks?
You're right. You know, it's been a disappointment, and so far it's not about asset quality. Of course, RBI did point out that they are a little bit concerned on the unsecured lending part. So that is something that is a smaller portion of the overall pie. I would not say that that could create concerns for the entire banking sector for asset quality. So the concerns are mostly on the margins, and that I think is a function of the fact that RBI has kept liquidity tighter longer than what was expected to be.
Yeah.
You're seeing consistent, you know, liquidity tightness and the corresponding hike in deposit rates. There's a scramble for deposits, and as you said, the big guy, the big bank wants to, you know, fix its asset liability for the longer term. So this is creating a lot of pressure on the funding part. I don't think it's about asset quality. It's all about the funding part, which is probably in the hands of the RBI to fix. And I think the way we are positioned as government spending starts again in the run up to the elections, we should see some liquidity coming back into the system and some pressure easing off.
Okay, just on that point we were making about, you know, stocks to buy rather than buying vehicles, someone's messaged me saying that they won't buy a Mercedes, but they'd rather buy a landmark cars because, you know, that's the stock that that deals
Premiumization theme playing out there.
Premiumization theme, and maybe, well, in a couple of years, they can just buy their own plane. I don't know. I don't know how things are going to go from here. But Mihir, you know, coming back to the here and the now, right? One theme I wanted to talk about was technology, because, you know, companies like KPIT Tech, companies that are doing a lot of work in AI, in generative AI, are doing pretty well right now. KPIT Tech just yesterday spoke about how they're very confident of achieving their full year guidance, the raised guidance. So what do you do in a space like this? Which are the companies to pick and which are the ones to avoid?
So in tech, I think there is a clear difference between the large names and some of the specific mid-cap names. And that's what's playing out. The specific mid-cap names have niches which they are able to exploit, and they are still too small, so small that they can continue to grow at a superior rate in those niche segments also. The larger companies are having a problem in the sense that they are so big that incrementally to gather that order book for 10 to 15% growth is becoming, you know, a bit of a challenge. So I would be very stock specific in the IT sector, and there is a lot of exciting work happening in the mid-cap space, I would say.
All right, maybe we'll leave it there. Thank you so much for joining us. Great conversation as always,
Thank
and
you.
thank you for coming in on short notice. Thank you. Well, it's Mihir Vora with sort of, you know, view on markets and how things are looking. Well,